My largest holding in my dividend stock portfolio, Microsoft, just announced a dividend hike of 10.4% today. If you can't recall, I actually predicted this. In line, their dividend is pretty much followed with these free cash flow growth rates as well. So today we're going to be talking about Microsoft stock, why free cash flow and dividend growth matters, and doing projections over the long term of how Microsoft will continue to grow and showing the power of the dividend snowball. And also, if you want to go the extra mile and want to get access to exclusive episodes and a big behind the scenes look and you want to support what we're doing here on the channel, become a channel member today. The link to that is in the description or in the pinned comment. With all that out of the way, roll the intro.
Hello, I like money.
Today, Microsoft did an increase of 10% in their quarterly dividend, having them pay 75 cents per share every quarter or $3 every year to shareholders as of today. I wish personally I could say it was a pleasant surprise, but I was not surprised whatsoever. I knew in doing my research what the type of growth that Microsoft brings when it comes to their dividend and free cash flow. If we take a look at Microsoft's dividend history and free cash flow history when it comes to their growth, it should come to no surprise to anybody that it's a 10% hike. Today is just validation to me and other investors that own Microsoft of how high a quality company it really is. As I mentioned in the past, I think Microsoft is the highest quality company in the world today. Yes, it isn't a 25% dividend hike, which they totally could do, but it's a dividend hike that is best for shareholders and the company itself. 10% is still very generous, by the way. If we take a look historically at Microsoft's dividend growth rate, as I've mentioned, this is pretty predictable. They have a 3-year CAGR of 10.06%, a 5-year CAGR of the growth rate of the dividend of 10.12%, and a 10-year CAGR of 11.45%. It is as predictable as a dividend growth rate can come. Definition of quality and sustainable dividend growth. You don't see any crazy years where they grow the dividend to 50% and then grow it 2%. And I think how reliable and predictable Microsoft's free cash flow and dividend growth has been has really allowed them to get an upper advantage in the stock market today, and that's why I trade at such a premium. They also have mentioned AI a few times. I've been saying for a long time now, dividends are the result of a company's free cash flow growth, business performance, etc. And this is no better example than Microsoft here. Microsoft's 3-year free cash flow growth rate is 10.35%, 5-year growth rate of 13.78%, and 10-year growth rate of 10.53%. All of those are pretty much in line with the dividend, which is absolutely nuts and proves my point correct. While Microsoft doesn't offer a 7% yield like some stocks, they offer amazing dividend growth, which leads to yield on cost, which over the long term should advantage us long-term investors. Now let's see how sustainable this dividend growth really is. Microsoft's payout ratio right now by free cash flow is 33.29%, which is completely sustainable. Most companies have a 50, 60, 70, or 80% payout ratio, and Microsoft has continued with this amazing dividend growth with the low free cash flow payout ratio. Ideally, you want to see a company's dividend going up and the free cash flow payout ratio going down. That is a sign of a sustainable dividend. Their payout ratio hasn't gone above 50% ever, and it hasn't gone above 44% since 2016. Microsoft's earnings per share payout ratio might be even better, currently sitting at 27.36% and trending down over the long term too. These are just amazing signs of a quality business. The sponsor for today's video is DividendData.com. You might be wondering, what is the website or tool that I'm using to show all the data that I've shown so far in today's video and the projections calculator that I'm about to show, and the website I'm using is DividendData.com. This website is the ultimate time saver compared to online free resources. If I'm looking to research a stock quickly and efficiently, I don't have 2 hours to go over a company's financials, but with DividendData.com, I can get it quickly and efficiently in 5 to 10 minutes. It's really that simple. You can also research companies, do projection calculators, and the valuation calculator to see if a stock is ready to buy for you. Try out the website for 2 weeks free, without charge, top right corner right now, or links in the description. For the next segment of the video, we're going to be using their projections calculator. So this is right now for my Microsoft position. I roughly own $1,900 of the Microsoft right now. So we plug in the current stock price, which is $328.65, the annual dividend, which is $3, the expected dividend growth rate, which is obviously going to be 10%, and the expected stock price CAGR, which I put as 9%, even though I think that's a little conservative compared to what I think I could put over the long term. These are the calculations if I never buy Microsoft again in my life, which obviously is not going to happen. I plan to add a lot more Microsoft in my days. For me personally, if I were to own Microsoft for 40, 50, and even 60 years, as I plan to, my total value would jump up over near $50,000 after the first 30 years, assuming Microsoft's growth continues. My total annual dividend dividend income would start off slow, but it would eventually explode near the 20 to 25 year range, getting over $300, $400 a year. And Microsoft isn't even known for its giant dividend, but with my yield on cost that I plan on paying and the expected dividend growth, I expect to have crazy dividends coming in from Microsoft compared to what I'm paying. All of this off a $2,000 investment today without ever looking at it again. It's really crazy the power of compounders. And my total earned dividends over the 35-year range, it will jump from $3,000 to $4,000 to $5,000. With reinvestment, that's obviously a bit of a difference, and as the time continues to go on, that'll differentiate and be even more clear. I think the craziest part though is seeing my dividend yield on cost grow over time, without my total invested capital changing one bit ever. We can see my dividend yield on cost slowly grows over the first 20 years, going from 1.39% to 6.66%. I'm a God believer, by the way, over 20 years. But we can see over 25 years that it goes to 11.27%, and over 35 years, my dividend yield on cost would be 32.37%. There's a reason I love dividend growth investing, guys. And if I reinvest those shares and my dividends back into Microsoft, my dividend yield on cost and the dividend snowball will be even larger. It really gets me hyped up thinking about this now, guys. I'm going to be honest. But what if I were to buy more Microsoft? And what if I were to do it consistently? What if I were to dollar cost average? Well, we're going to take a calculation metric now, and we're going to see how big difference really is. Alright, so let's say you wanted to invest $50 every month into Microsoft no matter what the stock price would be. Your yield on cost would be lower over the 35 years because you're consistently investing, but you'd still have a very nice yield on cost of 9.09% over the 35 years. But when it comes to the total value and the total returns you get, it's really impressive. Over the 35 years, you would be earning over $2,000 in dividends every year if you were to reinvest those dividends. Your total return when your total value of the investment would be over $150,000 by 30 years if you were to reinvest the dividends. Without reinvestment, there is a noticeable difference as well. The total earned dividends over those 35 years is $17,208.88 when you reinvest the dividends back into the shares. So what's the moral of the story here? If you were to sell your investment at any time here, you could be losing out on so many gains. If you were to listen to the opinion of other people and tell you to sell, you'd be losing out on gains over the long term. Guys, this is a marathon, not a race. Stay invested for the long run and you will do very well. Over time though, it is important to always stay invested, remain investing, and find new opportunities as well. Find a few amazing quality companies that you can feel very well going to bed at night with holding in your portfolio for the next 30 and 40 years, and let this compounding work, guys. Microsoft is not the craziest dividend growth stock, but its 10% average return every year when it comes to their dividend growth definitely is above average. Keep in mind, I believe it's sustainable as well, and I think over the long term, I'll do really well with my Microsoft position. Let me know in the comment section if you guys own Microsoft. If you haven't already and you're new to the channel, make sure to subscribe. On this channel, as I talked about in this video, I promote real man's investing, using time to our advantage and not buying any BS stocks based off of hype or fear. I appreciate you. If you haven't already, smash the like button as well. Check out the channel membership if you want to go the extra mile. Thank you, and of course, do dividend stocks, not drugs. Have a good one.